Alrighty, test, 1, 2, 3. Looks like my audio is all good. So today's session, very simple, very easy in my opinion. And today's session is all about understanding a very easy concept, which is fade the edges when our environment is likely stuck in a defined range. So that's the premise for today's team meeting. We're going to talk about the false breakdown at the gap fill via the overnight low. We're going to talk about why that was the highest probability trade. And we're going to talk about risk management 101. So I see some people stepping in. Thank you guys so much for tuning in. Make sure we have the Substack on our second monitor or on the screen. The Substack is going to be extremely important for everybody that wants to be successful in the game when it comes to everything that we do in Tradingwarz, because it is going to be the place where we post all of our trade plans, all of our videos, all of our analysis is going to be for free in the Substack. So definitely click the link in the chat that I just posted. That is going to give you a direct access to the pre-market plus trade plan analysis that we had for today in the pre-market for futures. And I'm going to walk you guys step by step on how we were able to buy the low of the day via a very classic gap fill false breakdown setup. And then I'm going to show you guys my live commentary in the Discord. And then, of course, we're going to talk about ideas heading into the next day. Overall, what happened? Let's recap. So firstly, let's jump into the Substack. Make sure you guys click the link in the chat. It's a completely free guide for you guys to take advantage of. All I ask for is that we click the like button so we can show Substack and its communities that we have a fantastic community. Let's go ahead and jump into the keynotes for today, and let's talk about the context and the short-term bias. So bears are in complete control from an intraday perspective, but buyers are doing a great job of sustaining price within last Friday's range. Yesterday, we talked about consolidation within last Friday's range being healthy for the charts. If we want to pursue higher, buyers must continue to defend above last Friday's low. Let's see how much more range trading we get. And this is extremely important to talk about. That's literally the very first thing that I talk about in my trade plan in my notes. Are we going to trend or are we going to be stuck in a range? This is the number one thing that you must understand before you do any other technical analysis. Before you drop your trade plan, you have to understand the likelihood of the charts creating a trend day or a range day. Range day literally means that we're stuck within a defined range. Obviously, the defined range for the whole week is going to be last Friday's range, the minus 3% flash crash. And then a trend day usually is created post consolidation with the right volatility sparked from external context. And the external context we had last Friday was obviously the president's tweets. Let's continue reading onwards here. Let's talk about the structure. So the bias is bearish, right? But go back to the short-term bias yesterday. We talked about consolidation within last Friday being healthy for the charts if we want to pursue higher. And if we are going to create a range day, that's going to give us some edge to the buy side, regardless if the overall structure of the intraday charts is indeed bearish until proven otherwise, right? So let's just talk about the bull focus. For buyers today, the gap fill / overnight low / last Friday's low are extremely key supports to sustain consolidation and digestion. So if we are to remain range bound, if we're going to give buyers any edge today, then the gap fill, the overnight low, and then finally last Friday's low are the most key supports to sustain such digestion within last Friday's range. Buyers need to see price stalling within last Friday's range if we do not want further downside expansion in order to contest macro resistances to flip the bias more neutral or even bullish. Defending above 66.11 can potentially showcase a chance for bulls to backtest heavy resistance at macro structures such as 66.53 through 66.57. Buyers must break out of this resistance in order to contest yesterday's balance highs. If they are unable to do so, 65.94.75 gap fill can maybe act as a support for a false breakdown of the overnight low 66.05.75, which can showcase trapped sellers for a move into resistances. So why am I highlighting can showcase trapped sellers for a move into resistance? Because again, we're going back to, are we going to be stuck in a range or are we going to trend? When we're stuck in a range, both sides get trapped back and forth, back and forth, back and forth as price action plays ping pong within the defined range. People that are chasing the breakout of the range get trapped, and people that are chasing the breakdown of the range gets trapped. That's why we're talking about trapped sellers off of the false breakdown of the overnight low off of key supports at 65.94.75 gap fill. Let's talk about how do you formulate a trade plan now based on those ideas. And in the pre-market live stream for the Discord members, we talked about regardless if the bias is bearish, we should not be scared if there is a good opportunity to long. And there definitely was a fantastic opportunity to long today. To give it a little bit more context, yesterday, on Sunday specifically, we gapped up and we started to go. We started to run. That means for RTH, if we're going to apply a range day parameter to the session, then we likely want to hunt a short yesterday as price action is going up. But today, if we go to the chart, price action is going down overnight. So if we want to apply the fade the edge principle in a range, then we're probably going to hunt along today as price action is pulling back, pulling back, pulling back. And obviously as a smart trader, we're not chasing a breakdown. We're not chasing a 200-point move when the overnight range is already 120 points, right? Back to the notes. So this is how you formulate a trade plan based on those notes. Bears have retained firm control with the understanding that consolidation within last Friday's range can showcase healthy recovery from buyers. Obviously, sellers want to continue last Friday's breakdown minus 3% move, but the only way to do so is while breaking down last Friday's low, right? I still want to sell pops, but I like the consolidation here, and external context remain questionable due to the government shutdown, which can cap volatility. 66.11 through 66.23.75 reacted in the pre-market, and so far bulls are working on a false breakdown of Sunday's low 66.32, which was the buy setup we had yesterday. All right, so here's where we get into the nitty-gritty of entry, stop losses, and targets, right? I can watch for the false breakdown of today's overnight low, 66.05.75, especially if price rejects the gap fill, 65.94.75, and recovers 66.05.75 with strength. So we still had to be a little bit cautious when it comes to managing our risk because the overall bias is still bearish. But if we got this setup, react at the gap fill and recover 66.05, if we got this false breakdown setup, I don't think anybody should have been scared to long the markets, right? Below there, the swing trade idea at last Friday's low comes into play. And obviously, last Friday's low has not come into play as of yet. Let's go to the chart now and let's talk about execution. So first of all, when we're looking for false breakdowns, selling exhaustion is a very important principle. It's a very important edge to understand. Literally just measure the overnight high to the overnight low. 113 points within the overnight range. And the closer that we get into last Friday's low, we can presume that sellers are going to be exhausted into these extremely significant supports, right? Regardless if they're exhausted or not, the probability of these supports reacting is there. And the probability of these supports reacting is all we want to bet for. We have no idea if the chart is going to bounce off of the gap fill and go back to the highs. Is it going to bounce off of last Friday's low and go back to the highs? You simply need to use our contextual analysis to understand the probability of these structures and look to play against the parameters or play with the parameters, right? We want to fade the edge. We want to do the opposites of what people are chasing, right? People are chasing a breakdown. They think the market's going to continue crashing down, but no, the external context is not calling for that. We would love to buy the gap fill, and we would love to play the false breakdown of the overnight low and trade against the trapped traders, which in this case would be sellers chasing a breakdown after a 100 points overnight sell-off. And look at this overnight selling as well. This overnight selling is extremely controlled. This overnight selling is extremely slow. This overnight selling is the opposite of what we saw last Friday. Look at last Friday's sell-off versus the overnight sell-off that we had today. It's literally night and day. Look at these candlesticks from 10:45 a.m., 11 a.m., 11:15 a.m. The candlesticks are going to tell you everything that you need to know. And look at the overnight candlestick. The candlesticks, right? They're very, very, very slow and controlled. That shows you that volatility can be, well, lackluster. Let's hop into the Discord now, and I'm going to go into how we executed today in real time. So 9:45 a.m., SPY VIP 65.93.25 gap fill is active. Apply the entry models, right? And these are intraday levels. Last Friday's low would be the macro level of support. In this case, we want to take advantage of the overnight low false breakdown. That's what we talked about in the trade plan. We want to see price action reject the gap fill 65.94.75 and then recover 66.05.75 with strength, right? We cannot see 66.05 become resistance. We have to recover above. If you instead wanted to just buy the gap fill straight up, that's completely fine. If you just wanted to buy the gap fill, that's completely fine. But for today specifically, let's just focus on the false breakdown setup. All right, so when we go back to the Discord, I say we want to make sure we apply the entry model at the overnight low, or you guys can well wait for last Friday's low 65.40 through 65.51. You want to see price action stalling it out at the overnight low, or printing a Fibonacci trap would be good confirmation too. Anybody that waited for the Fibonacci trap, unfortunately, it just did not get printed. And it is what it is. If you're waiting for the Fibonacci trap, it did not get printed, and you can do absolutely nothing about that if you're waiting for the Fibonacci trap. But you guys know me, I love to just take false breakdowns. I don't really need much confirmation because I know the significance of the levels that I'm buying based on who's trapped and who's in control. The Fibonacci trap is fantastic for new traders though that struggle with getting trapped, right, when they're taking false breakdowns. False breakdowns does take a little bit of understanding what the levels actually mean. Each level is different. Be patient and manage risk extremely well into resistances. No recovery of the overnight low, then no trade. So let's go back to the chart here and let's go to a 5-minute time frame. So we talked about just be a little bit patient, right? Give price action some time to show its hand. So first of all, when you see the bounce at 9:35 a.m., you know that there's some demand at this area. 66.11 FOMC low, and we also had the 66.05.75 overnight low. This reaction at the FOMC low, that's great. That's exactly what you want to see. And then if you're a false breakdown trader, what happens next is criteria number 2. We're getting a volatility attempt. We're getting a breakdown attempt, right? 9:40 a.m. is exactly what you want to see. But in this situation, I told people just be a little patient. Don't rush. Let price action show its hand. You see how at 9:45 a.m., we're rejecting 66.11. We're holding below 66.05.75 overnight low. And then eventually we get the 9:50 candlestick after 5 minutes-ish of being patient to finally recover above 66.11. So when you see that there's demand in the area, when you see that price action isn't completely flushing the zone and we aren't completely flushing off of extreme volatility, that gives you enough confirmation to market into the level 65 or 66.05 or 66.11, a little bit above 66.11. That's completely fine if you market it in here, but you have to place your stop loss mechanically, which would go behind the low. Right? Stop loss placement has to be mechanical, so there's no hindsight, and targets need to be mechanical as well, so there's no hindsight. Your entry can have a little bit of wiggle room as you're marketing into the level, right? So again, to reiterate, anybody that's hunting the false breakdown of the overnight low that we talked about in the trade plan right here, we have to understand the criteria behind taking the entry model. Number one, are we seeing demand in the area? Yes, we are. 9:35 a.m. Candlestick wick bouncing off the level. Number two, are we seeing volatility? Yes, we had a breakdown attempt at 9:40 a.m. Number three, are we seeing price action stall it out? Are we seeing price action hug the level? Or are we seeing price action just completely fall off a cliff? Well, obviously price action did not fall off a cliff, and obviously price action did respect the demand down here. And yes, sellers were indeed exhausted into this level. They did indeed get trapped because at 9:50 a.m. we immediately just go back above 66.11. We even go back above this little pre-market low at 8:40 a.m. 66.1575, and just think about it logically, right? If this zone were to fail, and if sellers were truly strong, if the market was going to truly be volatile today, then we should not see a recovery like this of the overnight low with the breakdown attempt at 9:40 a.m. And it's very important to understand what I mean by that, because now you feel extremely comfortable placing your stop loss behind the low of the day, which is now 65.93.25. You feel extremely comfortable placing your stop loss behind the low of the day. You're betting that the low of the day is in, and you're betting that sellers are completely trapped. If they aren't trapped, then your trade idea gets invalidated at your stop loss, right? That's the significance of your stop loss. Your trade idea gets invalidated at your stop loss. If sellers make a new low of day, my false breakdown fails, and I'm heading out to the next setup, or I'm heading out to the next day because my trade plan would have been invalidated too, right? That's the purpose behind your stop loss. So now let's talk about risk management. Let's talk about how to take targets. So the most basic way to take a target is literally just hunt that 1R, scale out a tiny bit of your position, and then you can go asymmetrically, right? 1R, 2R, 3R, and continue until you have a very tiny runner. Or you can use a more intermediate style of risk management, which is trading zone to zone. So 66.11 through 66.2375 is our support zone, and the first resistance above is 66.5350 through 66.6175, and this also aligns with the Monday low from yesterday, the previous day's low. This is going to be extremely important resistance, and that's going to be an extremely important place to manage your risk, right? Because if sellers maintain the most immediate resistance on the chart, well, then the low of the day is in danger, right? So this makes the most sense to place a target. And because we had about a 20-point stop loss behind the low, because we entered very close to the low of the day at the overnight low and the FOMC low, 66.11, this is about a 2R trade, right? And if you just want to keep it extremely simple, zone to zone, take off your position or leave on a tiny runner, I always recommend people to hold on a runner, because if we get something that happened like today, which is price action going to the opposite end of the balance, then your runner is going to pay you and pay you and pay you. And especially because the range is so large, we got a 100-point overnight range, and then we got a 100-point RTH range. Your runner is really going to gobble up a ton of liquidity, and we're going to get a fantastic move from the bottom of the balance to the top of the balance, just because that balance range is so big from last Friday's flash crash. So that's today in a nutshell. That's the only trade idea that we had today. Or that's not the only trade idea I had today, but that's the best trade idea I had today. And this is what I said after the trade idea was concluding, right? The best play for the day has passed, right? Has likely passed. I'm heading out. That's what I said at 10:21 a.m. 10:21 a.m. I said, you know what, guys? This is 100% going to be likely the best trade for the day. As we're heading into lunchtime, the first hour is concluded. Let's head out. That's what I said. I'm heading out. There's no more trade ideas for me. And that was the last call out that I had for the day. We did not short, simply just take that long, and we're calling it a day, right? Always the first hour of the day is going to have the highest probability for your trade ideas, right? So you want to get in for the first hour, and maybe you can come back in the afternoon, 2 or 3 p.m., but the middle of the day is always the least amount of volume. The least amount of volume volatility is where we want to stay off of the charts. So once again, guys, please check out the Substack and drop a like. Got an 8R. 8R, that's absolutely lovely. Absolutely lovely. 8R today. Oh, nope. Okay, well, if you did get an 8R today, that was absolutely lovely. And yeah, we just talked about risk management on this trade from the most basic perspective possible. But if you are intermediate, if you are a trader that loves better risk to reward, right? Take your 2R, scale out 25%. And then we talked about in the pre-market live stream today for the members that if we do go from gap fill to gap fill, right? Check out the risk to reward now, right? Got an 8R trade on that long. Absolutely phenomenal stuff. Angel, absolutely phenomenal. Great stuff. Pat yourself on the back. Alrighty, great stuff, guys. Fantastic live stream, fantastic session. And trail stop on key levels. Yeah, you definitely could trail your stop on a situation like what happened today, because we're stuck in a range, right? So if the top of the balance now is going to come back all the way down to the lows, then it makes sense to trail your stop loss, right? What I like to do is I like to just manage my risk by scaling out, and then eventually I get to around 25% of my original position, and then I'll trail my stop loss to break even with that 25% remaining active as a full-on runner, right? It either goes to zero or it goes to hero, that 25%. So we went from gap fill to gap fill today, and then we got back into some extremely important resistance at 67.1975 through 67.2925, right? Once again, click the Substack. I'm going to quickly show you guys my after hours recaps and my after hours analysis that I'm doing in the Substack as well. So here we go. October 14th recap. This is going to be sent out once we This is going to be sent out once we finish up this live stream. So here's the recap for today. Entry 6612. This is all done in the Discord, by the way. Zero hindsight, all in my trade plan. We have the trade plans highlighted. We have the Discord live commentary highlighted. And we also have a beautiful video here for you guys to check out. 2-minute short form video. And then we have the day trading analysis for the next day. We'll do just a very quick rundown on the notes and the structures. So tomorrow morning, we're not like chickens with our heads cut off, and we have a good understanding of what we want to do already. And here's the swing trading analysis as well. Exact same thing. We're going to talk about the notes and the structure. Other than that, guys, thank you so much for tuning in. I'm just very excited to continue my journey here on Substack and continue writing good content for you guys, because that's what I love to do. I love days like today, right? When our trade plan absolutely kills it. That's what professional trading looks like. You got to have your trade plan marked up already. And when RTH opens up, you best be ready to execute your plan. And if you don't execute your plan, you're probably just going to revenge trade and boredom trade and over trade, just like every other retail trader that trades without a plan. Make sure you have a trade plan. That's the number one takeaway that I want you guys to get from today's session. That's the number one takeaway that I want you guys to get from the trade plan, from the Substack, is to have a process. Your process defines your opportunity. Your process will define your performance, and your process will keep your mental health in check, right? As we journal everything that we do in the markets, we're not just journaling our data or P&L, we're also journaling our emotions, what happened for the day, etc., etc. Thanks to your predetermined levels. Yep. Thank you so much for reading. I appreciate it so much. Other than that, we're going to continue to refine the process as always. That's the number one good principle about trading in general, is you never stop refining. Took 900% on 0 DTE. Absolutely nuts. 900%. These guys are getting 8 to 9R, guys, in the chat. 8 to 9R, my friends are getting in the chat. Absolutely phenomenal. Yeah, 0 DTE made sense on a day like today, because the market was already very oversold from the overnight session into extremely important support. 0 DTE made sense even if you just went from zone to zone, right? Because again, the ranges are so large and the market is so oversold from the overnight session. You can get a 0.7 through 1% move on the S&P 500, and we're still stuck within a very defined range. But because that range is so big, the 0DTE options make a lot of sense. So it went from 0.4 to 0.4D ish, which is nuts. 0.04 to 0.4. Alrighty, guys, if you guys have any more questions, comments, concerns, you can let me know. It's a very classic day, simple day, gap fill, false breakdown. That's something you're going to see a lot if you spend a lot of time studying the charts. There's not a better setup than a gap fill and a false breakdown, in my opinion, especially when the overnight price action is selling off pretty much for the entire evening, and overnight we're just selling off into these strong supports. So you know what that means? It means that during RTH, for the NYSE opening bell, how many people are going to be chasing the breakdown because they think the market is crashing based on the overnight price action? That's what you want to take advantage of because you're a smart trader and you understand the external context in play. You know that the likelihood of the markets continuing to digest within last Friday's range makes a lot of sense for the parameters that you're applying to your trade ideas, right? Thank you guys so much for listening. Once again, click the link in the chat for the free Substack. I will be back tomorrow after hours, and for the Discord members, I will see you guys bright and early tomorrow morning for a brand new day trading trade plan and a brand new analysis. Tradingwarz.com. Let me type that in the chats. If you need anything from Rich or myself, and I will see you next time. Enjoy the rest of your day.